I think that 5 of the 7 Max 7 companies reporting this week is going to put a focus back on, mega cap tech. And if we could continue to see a run in these names that we've seen in the last year or two, that's been phenomenal. I think it's going to have a lot to do with what expectations will be going forward for that sector, but also the health of the economy. And what we'll have, in terms of the indexes, the major indexes that move so much based on these big names representing such a huge portion of the index returns. So it's a big deal. So it's good that the focus is back on earnings. And, over here in the U.S., we're, still concerned. I am on geopolitical risks. But as far as companies are doing, I think companies are performing very well. And the Fed rate cuts are coming at a good time of the season for companies when CEOs and CFOs are making their budgets for next year and thinking about spending. And so we're bullish on that because we think that interest rates going down is going to set up for a bullish environment for equities, as well as with China and trying to stimulate their economy with as much as they can in every different way.
Jimmy, I do get that point, but for the large cap tech names, the rate sensitivity is not that significant. It might be for the small caps, for the mid-sized companies, where the borrowing cost going down is a major boost in terms of their capex plans. But I wonder what in the commentary would you be watching out for from these mega cap techs as we stare at an election event next week, and what that would mean, what that would transpire into from a policy perspective for the next year?
I think the headlines will still be focused on guidance going forward and what they expect in terms of AI and the investment into AI and potentially a return. As far as the election goes, I think that as far as the market goes, with either result, I think the market's going to be okay. I think investors are going to be more focused on what happens underneath the presidential election as well with Congress. But I think in terms of the volatility that we could get based on the result, we could see some. But we're bullish on equities going forward, and I wouldn't be surprised if we get a pullback after the incredible returns that we've had this year so far. Remember, Tanvir, this is a market that it's been reported that many investors have missed. Since the low of October 2 years ago, there's still net redemptions into equity funds, according to the ICI and mutual funds and ETFs, which is incredible in a 2-year bull run that's been so big on the upside, where investors have plowed into cash. And so there's over $6 trillion sitting in cash that is going to get invested into the market as rates come down. And I think that, as we talked about, or as you mentioned, other sectors such as small cap stocks, we're actually bullish on other areas of the market outside of large cap tech. I would caution investors actually to look underneath the hood of their portfolios, do an x-ray, and make sure that they don't have too much of their money in those names. And because I think there could be a fantastic correction on the way back down, even if with a little bit of a bad news. I mean, if you think about the earnings report from NVIDIA last time, it was really good, and you saw the volatility in there, which means to me that there's a lot of momentum stock investors and short-term traders in these names as well.